The IRS has several regulations that employers must be aware of when giving gifts to employees. These regulations are designed to ensure that employees are taxed fairly on the value of any gifts they receive. Employers are required to report the value of all taxable gifts to employees to the IRS. This is done on Form W-2, which is the form that employers use to report employee wages and other taxable income to the IRS. The gifts are subject to both income tax and employment taxes. That is, they are subject to FICA taxes also. This is why it is very important to understand very clearly what gifts are reportable and therefore taxable to the employees, and which gifts are not. What is taxable or reportable gifts and which ones are not? Let's discuss. One of the most important IRS regulations for employee gifts is the de minimis fringe benefit exclusion. This exclusion allows employers to give employees small gifts without having to include the value of those gifts in the employee's taxable income. To qualify for the de minimis fringe benefit exclusion, a gift must meet all of the following requirements. 1. It must be of minimal value. The IRS does not have a specific definition of minimal value, but it generally considers gifts worth $25 or less to be de minimis. 2. It must be provided infrequently. The IRS does not have a specific definition of infrequently either, but it generally considers gifts that are provided no more than once per year to be de minimis. 3. It must be administratively impractical to account for. This means that the cost of accounting for the gift must be more than the value of the gift itself. Examples of de minimis fringe benefits, or non-reportable gifts, include 1. A coffee mug with the company logo. 2. A gift certificate to a local coffee shop. 3. A treat at Thanksgiving. 4. A small Christmas gift. 5. Traditional birthday and holiday gifts of property, not cash, with a low fair market value. 6. Occasional theater or sporting event tickets. 7. Coffee, donuts, snacks and soft drinks. 8. Flowers, fruits, books or similar property provided to employee on account of special circumstances like illness, family crisis, outstanding performance. 9. Occasional personal use of the employer's copying machine. 10. Local telephone calls. 11. Employee of the month parking. 12. Occasional award or holiday dinners. 13. Group term life insurance. 14. Achievement awards and plaques. 15. Occasional meal money for overtime employees. Now, what are the gifts that are not de minimis fringe benefits, and are therefore reportable gifts? Let's discuss those. Gifts that do not meet the requirements for the de minimis fringe benefit exclusion are considered taxable income to the employee. This means that the employee must pay taxes on the value of these gifts. Examples of gifts that are not de minimis fringe benefits include cash. Cash is never a de minimis fringe benefit and is always taxable, no matter how little. Cash equivalents, such as gift certificates that can be redeemed for cash. Gift certificates, gift cards that are redeemable for any general merchandise. Large expensive gifts, such as jewelry or electronics. Season tickets to sporting or theatrical events. The commuting use of an employer-provided vehicle for more than one day a month. Membership in a private country club or athletic facility. Use of employer-owned or leased facilities, such as an apartment, boat, etc., for a weekend. Again, employers have to report and include the value of all taxable gifts to employees on their W-2. So, you employers have to know which gifts are taxable and which ones are not. I hope this presentation was helpful for you to understand exactly that in a very simplistic way. If you have any questions, please do not hesitate to contact us. It will be our pleasure to address any questions that you might have. Take care and we will see you in another presentation very soon. Thank you.